So I've spent a lot of time trying to learn how to trade the RSI indicator. And while it's one of the most popular indicators in existence along with the MACD, for the longest time I wasn't able to implement it profitably at all. That was until I figured out how to actually use it. So today I'm going to tell you how I finally figured out how to use the RSI indicator profitably. Then later I'll go over how I trade this with the MACD indicator and the stochastic indicator as well, and trust me, you'll want to see that part, as the RSI is pretty much useless without those indicators, in my opinion. The RSI indicator. How many videos are there on the internet covering this? Yet it took me forever to implement this profitably. You see, most people teach that the RSI indicator is meant to give you overbought and oversold signals. Therefore, logic would imply that when the indicator is oversold, below 30 that is, we would be looking to take an up trade in the near future. And inversely, when the indicator is overbought, over the 70 area, well, that would be when we should look for a down move. Correct? Hell no, that hardly ever works. This is a very good way to start throwing your money away, and I know this because I've done it. What the RSI indicator actually is, and get this, is a trend indicator. You see, if the RSI is below the 50 level, that is indicative of a down trend. Take a look at this. Obviously the price on this symbol is going down. Note where the RSI level is. It's below 50. That is until the trend changes here, and now the RSI is above 50. Who knew, right? So when the RSI is above 50, we would then have an uptrend. Here you go. You can see here on this chart exactly what I'm talking about. Notice how we have an uptrend. Pay attention to how the RSI is above 50 this entire time. Now, I'm not going to spend a ton of time on this because it's very, very simple. Just look at your own charts and you will see this over and over again. And by now you have probably noticed that my RSI indicator looks different than yours. I only have one line on mine at the 50 level. And see, this is exactly why you've never learned to trade this correctly. The default indicator comes with a line at the 70 level and a line at the 30 level. There is no line at the 50 area on a standard RSI. So what I would say to you is that you should draw one on yours. And this is exactly the reason why so many people can't trade this correctly. The lines throw you off as to what is actually important, and you end up focusing on the 30 and 70 levels. Now, we can't trade the RSI by itself. Well, actually you can do whatever you want, but you'll lose money. But we can't trade it by itself because it's only serving to show us a trend. And it will only ever show us the trend on the current time frame that we're using. I use multiple time frames, but that's beyond the scope of this video. But if we added something like, say, a stochastic slow indicator, now we can more accurately pinpoint overbought and oversold areas, while also being able to determine the current trend. Let's take a look at this chart of Amazon on the 60-minute time frame from March of this past year, 2020. You see right here our stochastic indicator is showing an overbought area. It's below this overbought line right here. At the very same time, the RSI indicator is above 50. This would imply a strengthening uptrend, and therefore we would not be interested in taking the trade down at this point. Alright, but wait a minute. Right here at the close of this candle, the RSI now has a value that is less than 50. So let's pull this all together mentally. Visibly, the price looks to be going down. Add to that the fact that the stochastic slow was most recently overbought, meaning that the next likely direction would be down. Now we have our RSI. Remember, this is our trend indicator now, showing that the trend has now turned downward. Alright, so at this point, the stochastic is not yet oversold, and the RSI isn't either. So what should we do? What would you do? We enter the trade to the downside is what we do. Rather, that is short position or buying puts, and we place a mental stop, not an actual stop, but a mental stop right here at the most recent pivot high. If the price closes above the most recent pivot high, we would exit the trade. In this example, the price rises slightly but never closes above the recent pivot high. I'm not going to show an example where we actually got stopped out of the trade, guys. Then it moves down. When do you think we should exit this trade? It's not complicated. We exit when our stochastic and our RSI is oversold. Here they both reach that point at the same time, and this would be a safe exit point. That is a down move of about 100 points from where we entered the trade. So now let's add the MACD to the exact trade just to add one more level of certainty. Let's set the settings on the MACD to 8, 21, and 5. That's 8, 21, and 5. Why? Because the standard MACD settings suck. Use 8, 21, and 5. Trust me. Here's the exact same trade setup. Now you can see that the MACD is crossing down at the same time that we determined that we could enter the trade. Ladies and gentlemen, this is how you use multiple indicators at one time, and this will make your trades and your entries far more accurate. Let's do another trade example, and this time we'll look at an up trade. I'm going to stick with Amazon here on a 60-minute time frame again, and this time we're going to go back to around January 1st of 2020. The first thing that we can notice from looking at this chart is that the RSI has been consistently above 50. That means that Amazon has been trending up for a while. Now let's add the stochastic slow. It's pretty easy to see that the stochastic slow is oversold right around 1231. And at the same time, the RSI has dipped below 50. A downtrend, right? If you're following along, that would mean a downtrend. But by the end of the day, the RSI actually rises above the 50 line. That would be an uptrend. So when we read the charts, we can see we have a long uptrend, we have a stochastic that is oversold in a long uptrend, and we now have an RSI that is agreeing with us on the current uptrend with a value that is greater than 50. Then, if we want to, we can add the MACD, remember the proper settings, which starts to cross right at the last candle of 1231. And where would we exit? Well, a good spot, I'm laughing at how simple this is, would be when the stochastic is overbought and the RSI is also overbought, meaning above 70. So right about here. You cash out and you take your money. That is a one-day 50-point move on Amazon, which if traded properly with options would be well over a 100% return. Alright, so I know this video wasn't very long, but I don't feel the need to draw this out. None of this is super complicated, so please don't make it that way. People, including myself in the past, have a tendency to make things far more complicated than they have to be. I hope this was helpful, and I hope it earned me a push of the subscribe and the like buttons if you haven't already done so. Thank you for watching, and I hope you absolutely crush the markets in the coming weeks. Thanks, guys.